Bob, what do you take away from the minutes?
I thought they got it right. I thought they acknowledged what the rest of us see, that there's pretty good growth, there's some pickup of inflation, you've got enormous policy stimulus coming through, and it's time to get moving with rates and do 3, probably 4 hikes this year.
William, are you expecting 3 or 4?
3.5.
Right, what does that mean? They're thinking about it, but...
It may just be personal to me, but I hate this band, and I think it's a legacy of the zero bound, and I think it's going to go at some point. So if they keep it, then I would go more for 4. Mm-hmm. I've started to hear for the first time the conversation of 5, i.e. throwing in a 50 basis point at some point. To me, that's just a bit of a sentiment extreme, but we're getting the conversation onto the right page.
Okay, which is what the worry of the U.S. overheating. Is that, have we suddenly shifted from is there inflation, is it coming, to do we risk, having an economy that's too hot?
I think the concern that the Fed is behind the curve, that you have a lot of growth, you have some inflation coming through, and yet you have a Fed funds rate that is at a negative real yield. That just seems outdated. So trying to move it to something that's more realistic, and they may have to lean into a lot of growth and inflation if some of these policies come out of the administration.
William, what does that mean for dollar?
Well, I mean, I think one of the great mysteries of the markets this year so far has been the weak dollar. I suspect that'll start to be resolved because the way I look at the world is that the Fed is later in the cycle and the U.S. economy is later in the cycle than it had thought. And so we're going through a catch-up process, and a weak dollar, I think, is part of that. What's the problem for the market is we can get very comfortable with a Fed that's going at once a quarter, which has been the case, will have been the case for a couple of years by the end of this year. The problem is the market is now struggling with the end rate. And that it's obviously that's going to drive the valuation of the 10-year note and so on. And one of the reasons why rates vol has been so high is because even if you kind of understand what the Fed's doing, which is going once a quarter, you don't know where they're going to finish.